When you think of an airport, what comes to mind? Probably just a place you're trying to get through as fast as possible, right? But for an investor, it's a completely different story. It's a complex, sprawling business. And today, we are putting on our investor hats and taking a deep dive into one of the biggest airport operators on the planet, Aéroports de Paris, or as we'll call it, ADP. Let's get into it.
And that really brings us to the core question you have to ask yourself if you're looking at a company like ADP. Are you buying a safe, predictable utility? Something like a water company? Or are you taking a bet on a high-flying but much riskier global growth story? With ADP, the fascinating thing is, the answer is, well, it's both.
You see, ADP really has two different personalities. On one side, you have this absolute fortress, its legacy airports in Paris. It's basically a monopoly in one of the richest, most visited places on Earth. But on the other side, you've got this fast-moving global operator with huge stakes in high-growth airports from Turkey all the way to India. Understanding these two sides, that's the key to the whole story.
So, first up, let's explore the bull case, the optimistic view. And it's all built on the incredible, undeniable strength of its home base in Paris.
You really can't overstate how powerful ADP's position is here. They run the two main gateways, Charles de Gaulle and Orly. These airports serve a region that is an absolute economic juggernaut. We're talking nearly a third of France's entire GDP. Their local market is a massive 25 million people. Oh, and did I mention it's the #1 tourist destination in the world? In investor speak, this is what you call a massive strategic moat.
But here is where it gets really, really smart. ADP knows it's not just about collecting fees from airlines. They've figured out their most valuable asset is the thousands of people with time to kill and money to spend walking right through their buildings. So they're turning their terminals into high-end shopping destinations.
They even have a name for this strategy, X-Time. And the idea is simple. It's about moving way beyond the typical duty-free shop and creating this premium boutique experience. Think luxury brands, great restaurants, exclusive lounges. It's all designed to do one thing: maximize how much money each passenger spends. And the key takeaway is it is working like a charm.
The proof is right here. The success has been absolutely staggering. In 2024, ADP hit a new record, over 32 euros in sales for every single passenger who passed through their retail and service areas in Paris. For an investor, that's like finding gold. It's an incredibly powerful engine for profit.
Okay, so that all sounds fantastic, but it's not all clear skies over Paris. Now we have to flip the coin and look at the bear case, because that fortress we just talked about is facing some pretty serious headwinds.
There are some real structural risks here. First, there's a fog of uncertainty around how much ADP can even charge airlines because there hasn't been a long-term agreement since 2020. Second, let's not forget who the majority owner is: the French government. That means politics can sometimes get in the way of business. And third, the company is carrying a pretty heavy debt load.
And as if all that wasn't enough, the government recently dropped another bomb: a brand new tax on major transportation hubs. For an investor, this is a direct, unavoidable hit to the bottom line of ADP's most profitable assets.
And you can see the damage this is causing crystal clear in the numbers. Look at this chart. In 2024, revenues in Paris grew by a healthy 8.3%. More people, more spending, right? Great. But now look at the profit, the EBITDA. It actually fell by 4.4%. That drop is the new 131 million euro tax at work, just eating away profits.
So, if the Paris fortress is under pressure, where does a company like ADP turn for growth? Well, that brings us to its second phase, the international growth engine.
A lot of people still think of ADP as just a French company, but that picture is completely out of date. Look at this. In 2024, less than a third of the group's passenger traffic actually came from Paris. The lion's share, the majority, now comes from its massive investments in TAV airports in Turkey and GMR airports in India. ADP has gone truly global.
And this right here, this chart shows you exactly why that global strategy is so critical. While profits in the core Paris businesses were actually going down, look at the international segment. EBITDA there grew by almost 30%. These global assets aren't just a side project. They are the main engine of growth for the entire company right now.
So this is where it all comes together. If you're an investor, you're constantly performing this balancing act. You're weighing the stable, cash cow business in Paris against the high growth but maybe higher risk international portfolio. And when you stack ADP up against its European peers, you can really see its unique position.
Its profitability, its ED/BTA margin is solid, but it's nowhere near as efficient as, say, Zurich. At the same time, its debt level is better than Frankfurt's Fraport, but it's way higher than Zurich's. ADP sits right in the middle of the pack, a true hybrid.
All of this creates a huge tug-of-war for every year that the company earns. Management has to pour money back into just maintaining the airports. They have to pay down all that debt. They've promised a big dividend to shareholders. And they still need to keep some dry powder to go hunt for the next big international deal. Juggling all four of these is the central challenge.
So we end right back where we started. When you look at ADP, what do you see? A stable fortress that's under siege? Or a savvy global operator using that stable cash flow to fuel a riskier but potentially more rewarding bet on global growth? For any investor looking at this stock, that is the fundamental question you have to answer.